following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I hope you guys are doing well this Thursday morning. We're going to get into the currencies quickly because there's a lot of shifting going on in these things, and I know you guys are aware of that, but we're going to hit the dollar really quick, comprised of some other currencies here to get a kind of a net value here as a I think it's six currencies in a basket. But let's take a look at this big number that we talked about yesterday. I mean, I actually talked to you guys about trying to pick a battle here on the long side, buying support around 97.89. We're trading about 97.83 right now. So my stop was hit on this one. We caved in a little bit farther than I thought it was going to happen. And that's a little bit too much pain for me, but we're kind of rallying back up into that big inflection point on the weekly. This profile appearing above price action here is not good. That is a pretty bearish sign in general, but we kind of talked yesterday about long-term takes precedence over short or intermediate term over short-term down the line. We always talk about that, and right now I'm just kind of sitting tight. I'm a little bit more longish the dollar in my mind than wanting to pick battles on the short side. So I'm just kind of waiting to see if we can get back above 97.80. Let me state that number again, 97.89. We're trying 97.86 right now. I just want to, see if this was just kind of a fake out. Let's get a bunch of people out like me that were trying to buy support yesterday, and then we'll try it again. I mean, that's kind of where I stand on it, and that's for some folks it's hard to do. It's like, well, God, why do you want to buy it higher? We always talk about that. I thought it was buy low, sell high, and sell high, buy low. Sometimes you got to wait for these confirmations, in my opinion. Here's the 240 on the dollar, if I can get it to pop up. Somewhat similar situation on the 240s breaking up, but I'm kind of ignoring that. I'm just paying attention to the weekly here. And that being said, I'm going to take a look at the euro, which again was a stop out the other day for me, trying to short against this 109 area. We talked about now we got to wait until we either get back really high. And what does that mean, really high? That means that we have some new profiles that might appear here. If you were trying to short against this yesterday afternoon, then you had a decent move down here already. But that's kind of throwing the dice, in my opinion. You don't have any new profiles here on the daily. We obviously broke stride here, getting back above, what is this, 106, 106, 67, 68. But it's either get back down on the euro, it's either get back down below 109 or show a new profile on the daily that we could get some inflection points off of, or go really high and get into this 113.52 area. So the tone of it, again, I haven't mentioned going long, and there are opportunities to go long the euro at times. There's no doubt about it. But I'm trying to stick with the game plan of shorting resistance on this thing based on lately this ECB announcement, which wasn't the rosiest situation for printing money over there, which caused the euro to change gears, and therefore that inverse relationship with the dollar to change gears. I think that's kind of a blip on the screen, and I fully believe they're going to have to get into satisfying what the consensus was on that 30 to 40 basis point reduction. So they only went 10 basis points, and that shocked the hell out of I'm not supposed to say that. Shocked the heck out of everybody in that EMFX conference that I was in London. They were literally pissing in their drawers and heading out of there to yell at their desk, but not pee. You can say that, but not pee. Okay, cool. I'm trying to figure out what I can say and can't say this morning. Okay, so let's just let's hit the ruble, because this is something that's had a little bit of a pullback here. But the cool thing is, and I think there's a lot of venues you can look at now to trade this ruble, U.S. dollar. The cool thing is this morning we had a new profile appearing below, which, believe it or not, the ruble can devalue even farther. And remember, crude oil is not really bouncing at all with this dollar getting devalued, which should by default reprice itself. That's not happening. That's very bad. Therefore, that's very bad for the guys in Russia who support a lot of the Russian economy with oil and the taxes thereof and all that kind of stuff. So 68.0506 is going to be, let's just call it 68.06, round it off. It's going to be a buy point on the ruble, believe it or not, in the collection area down into 66.22. If you can stomach a move like that, that's still going to be something to pay attention to. You could trade this light up here, and then if we kind of start showing some momentum up again, you can add to that position. I'm actually looking to, as this collection area, as I like to call it, this whole new profile down here, to start light around 68.06 and continue to buy down into 66.22. But I'm looking at this still as a long-term position. And believe it or not, this has been an insanely cool trade. I think we had Eddie on. We were talking about this around 52, 53, that general area when we popped up. This was literally last summer. Or this past summer, excuse me. And this type of action here was just predicated a huge move, So still relatively bearish on the Russian economy. We talked about the Canadian dollar, especially yesterday afternoon on Tom's show. With the dollar getting hammered in general, the Canadian dollar is really not repricing itself that much at all downward. And if we can spin up here and consolidate and actually form a new profile on the daily, I actually think we can go higher on this. There's not a lot of good things going on in the Canadian economy right now, and oil's not helping that situation. Neither are any commodity prices. As you heard from Juan yesterday, the Colombian economy kind of transitioned about 10 years ago to a natural resource type economy. It started digging more holes and drilling more wells and things like that. And I'm not saying that that's a bad thing over time. Natural resources are literally where things start. Natural resources, then services, and then hiring jobs and things like that. But natural resources have value. Commodities have value, and people want them, and people have to have them. So I think things ultimately are going to turn around. But right now, the Canadian dollar, Colombian peso, things of that nature are just suffering huge. And it may not be over, guys. So things on their lows can go lower. Just always remember that. We talk about it. Let's take a look at a trade that has been working out quite well. We talked about buying the Aussie dollar around 71.69, 71.70, coupled with this 71.92, this collection area down here on the weekly and daily. Just want to point this out. I've been pretty bullish, and this is holding up incredibly well relative to the commodity bashing that's going on, the haters and bashers that are killing the commodities. That's a saying from the Philippines. I love it. Haters and bashers. Don't understand it, but I like it. Still looking at targets up top, 74.39, 74.40. Still really love this trade. Here's a daily, as you've seen how we kind of, waited patiently for that pullback. And this is going to be something. Let me see here. Let me just, just had a guy on a desk calling me. I want to tell him I'll call him on the break. Let me review the den here. That was kind of the sum of the, okay, let me hit the Japanese yen. Because the carry trade kind of being over right now, we're going to have to take a pass on the yen. I tried to pick a battle around 122.5 on this. Again, a little bit deeper against me than I wanted, and so that's kind of a stop out there right now. I like the action as it was resting above that area, but the euro coupled with, or the announcement coupled with what the dollar's doing, is not something that we're going to try to play around with this at all right now. we're down below weekly and daily profiles, and that's not good. And there's nothing really to hang on to down here. So there's really no reason to be in this trade right now on the yen. It's just a sit tight situation. Let me see where we're at here. Okay. Let me read the DIN. All right. Feel free to throw questions out there, guys. That's what the DIN's for. That's what we're here for. All right, 10-year. We're just going to kind of keep going down the usual suspect line. We talked about, a little bit of a trade right at 126.01 up into 126.23, 24. That's been hit. Not a lot of direction on the 10-year. I love how it's actually holding up right now. So believe it or not, I'm apt to buy breakouts above 126.23, 24. Sitting tight now because some targets have been met here on the showing the visuals on the profiles here. I'm going to go in our futures section and just give you an idea. Where do we have those now? They're all together. Wow. There's a 10-year. These are in decimal form. We can't put these in fractions, but as you can see, we're 7 weeks continuously below weekly profiles, and that daily trend is down. But any type of reverse here, I'm going to be looking to buy that actually. And where the target's up top, it's a weekly retracement back up into that 127.14. So about another 3/4 of a handle possibility on the upside before we start looking at major resistance on the 10-year. But that's the way I'm looking at it. JB, I'm going to get into the S&Ps, the S&P 500 futures right after the break. I definitely want to talk about that. Let me just hit some things that we can hit really quick here before that. Got about 40 seconds here. Crude oil, man, I mean, dollar goes down, crude oil sits still. Dollar goes up, crude oil goes lower. That's the relationship, and that is not good from a default repricing standpoint. So what is it telling you on crude oil? It tells you that we've still got some lower prices to attain on this, and the market has not found anything it wants to start trying to get into a tug of war between the buyers and sellers. This is a sell everything type of situation here. There's really no reason to pick any battles on this thing down here. Zero reasons, especially if the dollar rallies more. This could get cratered even farther. So we want to see new profiles on the weekly or daily setup for long-term nibbling opportunities. And those more than likely would be short-lived trades anyway. So we're going to come back, hit the S&Ps. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Just, man, have you guys seen the crazy what do you call them? Electronic razors, face shavers out there. What are they called? I don't know what they're called. But I went to Target and looked around at those. They had a bunch of them on sale. Man, they got some crazy cool razors out there now. The Nanos. Expensive too. They got those electronic razors up to $200 now. I was blown away. I got the El Cheapo, but mine completely conked out. So I just didn't know they had high-level things like that out there. Yeah, no kidding now. All right, so let's take a look at the S&Ps here. And, yesterday we talked on Tom's show about this 2045 area being so huge, and it is. And we've had a little bit of a, noise around there. But remember, going back to our scanner, I mean, this weekly thing is just sitting right at the precipice of possibly crossing again. And we got close to that, as you can see, the other week, and we're not converting over. Like when I say rolling over, a lot of the long-term weeklies are literally still in the balanced area. 250 stocks are still within the balanced area. So we don't, and in a high VIX environment, you kind of got to go down to shorter-term time frames. I'm going to talk about that now. I'm going to hit the daily. The good news is for shorts is that, I mean, we definitely, as you can see here, let me blow this up a little bit. As you can see here, the middle ground kind of started rolling over, converting at the same time. So you had a higher level of stocks in the middle ground, and I'm going to say that was relative to now, that was probably over 250 stocks easily in the middle ground in the balanced area of the S&P. And as we started crossing here again, the middle ground had started evaporating. So you had more stocks converting over, all right? And that's going to cause a quicker reaction in the S&Ps. So, and again, I've said a lot there. Let me kind of show it to you on the chart. So when we get near these inflection points, especially on a short term, when you're rallying back up into these areas, these are confirmations coming back up. Let me back up even farther. When I was in London talking to Tom, we had this kind of breakout, and then we had the reversal. All right. That is very damning when something like that happens, a breakout and then a reversal. So then we started talking about, well, now you've got to be looking at 2088, 89 as resistance. That happened once. It happened again. I didn't like the way this thing rallied back so quickly into it. It was just a tenuous situation from being down in the 2040 area, then going up literally 50 points in a day almost. I guess that was 50 points in a day. But we look to, you know, the inflection points on the index itself, and then we also look at this situation, and in this case on the daily, on the breadth charts, we had more of our middle ground just evaporating as this thing started crossing over again. So, you know, what do you do with it now? You know, right now, sitting at this 2045 area, we can bounce here, guys. Even though all those breaths on 60, 240 and daily are negative, the weekly still is relatively balanced, all right? And we are at a weekly big number. So those shorts, again, you know, you might be saying, well, what about this 2028 area down here? Right now, we're kind of non-directional on the long term. Now, if we had breadth negative here, and we were in a low VIX environment, I would be saying there's no way in heck that you can be buying this, all right? But right now, you know, we've come off pretty good. We're at the big inflection point. We had a little bit of noise yesterday getting below there, and I understand that. I mean, we had a range yesterday of 2080 down into 34. So what is that? 46-point S&P range yesterday. All right. So right now, this is kind of a no trade to me. I don't see a lot of direction here. We're at a big inflection point. We've kind of been bouncing around, actually hanging around this morning above that area. So right now, put a gun to my head. I'm looking at this 2045 area as a little bit of a day trading pop here, but we're going to have to pay attention and keep stops kind of loose, trade a little light, and that's the way I'm looking at it. There's not a lot of leverage here for shorts right now, right? And in fact, you could get stung here on any type of big move off of this 2045 area. So today's Thursday, tomorrow's Friday. I think I can easily say that. Any weekly closes below 2045 and that breadth getting negative, then you've got some clear-cut, really good signs that you can leverage against 2045 on the short side. But right now, probabilities, all things considered, not a lot of edge yet. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Question on some of the things in the den. Just want to state that, you know, the last thing we've done, unfortunately, is create a video series on how to generate points from the scanner as easily and quickly as possible. So now that we've got a lot of the programming out of the way and things aren't going to change. The problem with writing software, if you guys are, we do a lot of that in my software outsourcing company. It's hard to do manuals and you know, do explanatory type documents or whatever while things are changing, because then you have to do them again and again. And if you write manuals if you guys have ever been a technical writer or just some kind of content writer, that's the thing that makes you pull your hair out. So now we're at the stage where I'm going to be doing some pretty decent, in my opinion, video series, not really what happens when you click the blue button, that type of thing, how to generate alpha or whatever they call it. That's the new buzzword now, instead of making money on this thing. And I've already asked Tom to kind of reserve a slot to do more of a higher level webinar on the scanner itself and how that hopefully can give you more freedom, cut down time, and make trading boring. As I like to always try to remember, we don't want it exciting. We want it matter of fact. Yes, agree with you fully, Tucker. Okay, so low VIX environment. Yeah, what I was saying is, you know, if we go back, me see if I can pull up the S&P continuous contract here. Well, actually, let me just pull up the scanner. Here we go. I'm going to pull up our weekly. So, this has been a relatively low VIX environment. I'm going back to 2012 here. Is that what it is? 2012, yeah. So obviously, has no remnants, so to speak, of a situation like 2008 or the VIX. I think the VIX reached 100 at one day in 2008. Maybe I'm wrong, but it seems like it was constantly above 50. But in a low VIX environment, the conversions, especially on the longer terms, are going to be a little more quicker. Are going to be quicker, more quick. I'm from North Carolina. Always remember that. We don't know how to speak down here. So in a high VIX environment, you're going to be as you look at these profiles, let me back up a second. They automatically output, and therefore the scanner accepts them automatically outputted from the algorithm. So when the VIX starts getting higher and the volatility starts getting higher, we throw profiles out there with wider ranges on individual stocks and instruments for that matter. So you got obviously a bigger balanced area, and therefore you're going to have a lot more play in when these things convert over, when the pack itself starts moving into either above profiles, within profiles, below profiles. So in a low VIX environment, those weeklies, and we've had some instances where we've been in a low VIX environment. Let me just kind of focus on that one. Well, damn it. Let me just grab this here. For instance, back in September last year, we were kind of in a low VIX environment around September 26th. Let me go back to our continuous chart for that. So let's see, September 26, 2014. Let me just show you as an example. Let me go to our continuous contract so we can get an idea here. September 26th. Okay. That week right there, I think our profiles were very similar to our underlying contract. But anyway, we started getting heavy and started having a lot of our instruments in the S&P 500 and our long-term weekly breadth start rolling over actually while we were within the balanced area. Now, just like we're looking at today, we're not exactly rolling over and going negative within the balanced area, but that started happening in a low VIX environment back in September 2014. Some of my levels are off here based on the continuous contract. But we talk about a high VIX environment being able to use the lower term time frames because on the breadth situation, because it's going to be giving you a little bit more immediate transformations and leading indicators on the breadth. So, and let me go back to our current. And there's little things, just like I showed you earlier. Let me go back to the daily. And let me blow this up here. Just as we talked about, I mean, you start seeing the middle ground start to evaporate even before these latest crossovers on the daily, all right? So, obviously we're trying to get some kind of edge and not sit on our hands all the time. And we talked about, in combination, getting back below 2089 after that run up and then the immediate reversal and getting back below that 2089-29 area. And then we're looking for some edge based on what the internals are doing relative to profiles. And that wasn't a real, high VIX environment back then, but we started showing hints of the ability to possibly short against that, obviously with stops above 2089, 2090. So we picked up some decent points there, taking that attitude and understanding that there was some conversion happening here. All right. Then we got the crossover a little bit like a day after that. And it's been 2045 were the targets at that point from 2089, and it was it's still contra trade against the long-term trend. I mean, we're still realizing this chart right here. This is not everything's going to hell in a handbasket. I mean, we've come down into a major inflection point, 2045. The VIX is not that high, and our weekly crossovers haven't started happening, especially ahead of time here. So again, I'm just not convinced that there's a lot of edge here to try to go short, especially around this number. At this stage, just to reiterate, tomorrow's Friday. We're going to have a weekly close. That's a fact. And we want to see where that lies. And we want to also pay attention to, the weekly breadth. I mean, if some of those instruments start converting over before tomorrow and we close below 2045, I'm going to feel much better that we can actually go lower with using that area on the index as resistance. Can we go lower now? Yes, absolutely. But, we're still in La La Land up here, way up there. And this is not a, as Tom would even agree, this is barely coming off all-time highs. So let's see. This is something I thought they would take the air out of a lot quicker. Let's see here. It never reached 189. Okay, the VIX, all-time low. I thought the VIX had reached lower than 9.39 in 2000. I mean, that was running all prop firms out of business, basically. They need volatility, and I remember when that was happening. There was a lot of prop firms closing back in 2007. Let's see here. Okay. All right. So this is something I thought they would really, really suck the air out of if it started happening. I talked about 80.50 and the 81.50 as a selling point for these discretionaries. I mean, Amazon's kind of been running the show there. It's 12% of this ETF. This is the XLY, excuse me. We're sitting on support just like the S&Ps on the daily, 79.43. By tomorrow's close, S&Ps, if they close below 20.45, again, we talked about waiting a little bit patiently for that. This XLY would definitely, in my opinion, be a little bit lower. There's a good chance of that. And then you can start really looking at that daily unfair low on the XLY being 79.43. These are all in the scanner. And then start to look at a lot lower numbers, 71.72 on this particular ETF. But the market's got to give this some help. Let's take a look at Amazon. Based on this is, damn it, I always type that symbol in wrong. Amazon, based on this being almost 12% of that particular ETF. So here's the situation on Amazon. This is the first signs. It's the reason I'm bringing this up, because this is the stock that seems to want to run that particular ETF. Got a new profile attempting to appear. You're going to have some new inflection points to pay attention to here on Amazon. Here's the daily. So immediate wishful thinking would be 640 on Amazon. The new profile attempting to appear, the weekly, coupled with this 670, 671 and stops above, and a little bit of divergence down here on our navigator. I still think the XLY they could suck the air out of it really quick, and especially Amazon could obviously give it a lot of help with about a 25-point lower move on this thing. Let's see where we're at pre-market on this, 665. So, about where we closed yesterday. Okay. All right, I want to go back to this old guy. IBM had that new profile attempt to appear 2 weeks ago. It appeared. We're going down and meeting that. Again, this is not the darling relative strength stock of the world. Again, things on their lows go lower. If the market can help this get below 2045 and close below 2045, I think that IBM's going to be looking at a new breakdown to sell below 136. And again, I really think this thing's going sub 100, guys. Let's see. Terry, I don't know what you're saying there, Terry. Is there a question? All right, maybe you can throw it out there in the den. Johnson & Johnson. Obviously showing some strength lately, but this particular stock, again, any type of help in the S&Ps, they could suck the air out of this really quick also. So any closes below 101.37, that'll be coming off those weekly unfair highs, and then you've got some targets 3 or 4 points down on this immediately. So getting closes below 20.45 in the S&Ps and getting a close below 101.37 on Johnson & Johnson might have a little bit of a ride down here, a 4-point ride. That's a 4% move in Johnson & Johnson. It's not the weakest stock out there, but this is one I've been looking at that they may dismantle in the short term. Oh, Terry, sorry. Let me answer that question. It's a good question. Let me see. What we usually do on the month code changes is we look to eSignal, and when they start converting over their continuous contract, for instance, to March in this case, then we'll start transferring into the March contract. Yeah, Peak D. I did a Bloomberg article on the XLY. I mean, the market obviously had to give it some help, and it was considered, you know, a kind of a high risk trade with stops in force. Let me see if I can. I'll pull that up after the next break. I'll just show you what I wrote. 3M. A lot of dollar exposure on this one. Yes, I will. A lot of dollar exposure on 3M, obviously multinational, blah, blah, blah. I think the S&Ps are going to run the show here on a lot of these, and the dollar, and I think the dollar is going to rally. So I think we're going to have some more downside pressure on some of these multinationals. I'm going to look at Caterpillar in particular here. Man, this is bad. So dollar starts getting hit. This thing doesn't come off the floor. Caterpillar, in my opinion, is not on sale. I had some people send some emails about this. It's stay away. This thing could go lower. Guys, we're going to be right back. I'm going to just talk about the XOY a little bit again based on that article. We got 5 minutes after the break. We'll be done.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. So sometimes I just get up in the morning and start drinking vodka and start running my mouth. Big day. Then the lawyers take over later. But anyway, it's talking about the profiles and when do they output. It's a proprietary algorithm. I'm pretty happy with it. An interesting story. I went to this Bloomberg thing in Shanghai. It was my first experience in China. I literally landed, and there's a Bloomberg charting day, and they get some people together, and there was like 300 or 400 people. I was blown away. It was the biggest gathering to listen to, some Bloomberg guys, and I was there along with another third-party vendor at Bloomberg. And the first thing that happened is Bloomberg actually got on me about this because I started talking about the normal processes of trying to deduce, get an angle on a trade with our information. And we've got 16 indicators, I believe, on the Bloomberg terminal other than these profiles or past profiles. And one of the guys literally raised his hand, stood up and asked, what was the formula, why he couldn't have it. I was like, okay, that's pretty brash. But that's the way a lot of people in China think. It's like, I need it, I need to replicate it, and I need to sell it for less than you sell it for. And I got kind of pissed off at the guy. And Bloomberg had to pull me aside. He said, you can't really bash the people in the audience like that. And but it was just completely. I'm not Peak D. I'm not saying this is disrespectful. It's just that he literally got upset because there was not some public formula that he could replicate, and then it got into well, if it's so special, then why are you selling it to people? Why are you giving it out? And I said, well, I don't think it's going to affect our internal trading, so why wouldn't we actually allow people to use it? And then that started a whole new argument in front of a big audience, which was not good. So this is supposed to be a funny story. Talking about the article. Okay, so what I did is I basically took, and this was last 2 weeks ago maybe. So looking at the XLY, it's a relatively scary trade. I mean, this is not a weak instrument by any means relative to the market. In fact, it made higher highs when the market wasn't making higher highs. But I looked at this relationship here that was developing on our navigator relative to this really wide profile, which predicts a lot of volatility, and I don't think it's over for that. And also the dailies having a profile appear above price action on our time frame below. And also, this is our breadth odometers were relatively negative as the S&Ps were relatively positive. So a lot of things were lining up for a change in tone in the XLY, even though it has been a really, really strong sector. This is the discretionary sector. So again, this is one that's a little bit more of a scary trade, but sometimes those scary trades, and Tom will tell you, I mean, these are the ones where your time frame is really compressed on when you actually can make some decent amount of points in a short amount of time. I'll throw this in the den. I promised this before, but I think I got it handy right now. So that's the situation in the XLY. Guys, you've been great. Larry's next. Stay tuned for all the hosts at TFNN. Stay away from CNBC, and especially Crank. We'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.